Hi everybody, welcome to another update on the gold forecast index, the holy grail to predicting gold prices. In my last video I said gold would be going up and it has gone up by $100. Better than nothing. If we go up $100 every month, then we will get to 4,000. Let's see the latest data from the gold forecast index. Looks like we have a massive crash here, and that's all due to the front running of the tariffs. So I wouldn't pay too much attention to this because the deficit numbers have gone down a lot because of the imports that went down. So a lot of front running here. So I think we should wait a few months to see where this stabilizes, because this doesn't look like a good data point. Tail roll rate still up, that's bullish. Here I still need to see an improvement in this chart. So inflation plus unemployment rate still down. I still thought unemployment rate is going to go up, not that much. Inflation should rise. Yep, that should rise because M2 is rising. Real output, I think we got pretty bad numbers today, so that's good for inflation and gold. Gold demand. This is in a rising trend. I don't have China numbers yet, but this is rising and should be bullish for gold. GLD still low, is starting to go this way, go up. So if this goes back to the top, we should be going much higher, at least 4,000, 4,500. COMEX is dropping a bit. Let's see where this will stand. Deliveries not as good as before, so but the trend is actually going up. So this is down and now it's back up. So still pretty positive. LBMA holdings starting to bottom out, so probably headed this way. All bullish. China gold demand bullish, going up. So it was going down, now it's going back upwards. So good trend. The trend is your friend. Gold imports going up, even as the gold price is this high. Silver demand the same. Silver is bottoming out like this. So yeah, looks like silver will follow gold higher. SLV, silver ounces also bottoming out. PSLV also bottoming out, so that's looking good. Shanghai warehouses, not a lot of movement. COMEX silver topped out a tiny bit, but still in an uptrend. Then these are the charts from before. You know that everything is bottoming out. Not a lot of people own gold. Allocations still at bottoms. And yeah, you can see 2011, that was a frenzy. This is not even the start of a frenzy. Okay, I still think that bond yields will be going up and stocks going down because we're in inflationary period, and that's also good for gold to go higher. So this goes up, yields go up, and stocks go down. China Central Bank purchases. This is official data, but the real data is around 30 tons per month. So they are still buying even at these high gold prices. Reserve composition, you can see from 3% gold now to 5% gold. This is going to go much higher. And this is official data. So the real data is probably even higher. Retail demand still at 0. This is amazing. So there is no frenzy yet. The retail still needs to come in and buy gold and silver. You can also see that from the premiums at rock bottom. Nobody wants silver right now. Same with junk silver premiums. No demand. If demand starts to come, then we will probably go up. Latest Shanghai gold premium is not that good. I had hoped for more China demand, but it's down a bit. So it's not all bullish at the moment. So I had hoped that this would already go to 3,500, but yeah, not looking that great. So if you just look at, for example, here, went up, could be a consolidation phase that's coming. But of course, if this shoots lower like this, then this can still overshoot to 3,500, right? If we overshoot like this with a frenzy, then this could go to 4,000. So how do we look at this? As long as this is positive, you can expect a higher gold price. So I'm still bullish, but not as bullish as last time. Shanghai silver premiums also down. We are currently already at 35. So I expect this to be somewhere here. Yeah, so frenzies can come, but then it will probably top out again. So let's say 35 to 38, and then flatten a bit with the correction. We will see. Keep looking at this chart. Upmex gold premiums actually stable historically at 4%. COT report, yeah, this was a good one. Open interest very low at 400,000 contracts. This is pretty bullish because this is a bottom, as open interest is down, but gold is still up. This means that the longs are starting to come back. If this goes down, then there's more long positions starting up, which means gold goes up. So you want this to go like this, and this go like this. So all looking great. This is the open interest chart since 2000. That's the green chart here. As you can see, open interest up, gold up, down, up, down, and now open interest is crashing, but gold isn't crashing. So if this goes back up, open interest up, means more participants get into this market. Gold could shoot to 4,000. Looks pretty good to me. Smart money was still out, but they're starting to come back into the gold market. Swiss franc doing good. Tips yield, yeah, this needs to go back up, and this is not going the right way currently. But actually, this tells me that gold is undervalued. Okay, because gold is going up while the tips is even going down. if at some point we go back up in the tips, actually minus the tips, then gold will go up. You can see that from this chart. This is bullish. Tips down, gold up. If tips goes back up, then gold will go up even more. Okay, that's bullish. Real yields, that's actually the same. You can see real yields still very positive. And this is minus the real yield. If we go back like this to a negative real yield environment, then gold will shoot up. This is bullish. Seasonality also bullish. We are in June, ready to go like this. So prepare for a big move higher in gold. Technicals also looking good. You can see here the inverted head and shoulders and going much higher. This is a bull flag going higher. Sentiment, I think the sentiment is a bit too bullish right now. Yeah, not all the parameters can be, yes, they are extremely bullish. So this could be a temporary top. Yeah, it could rise even more at some point, maybe half a month, and then it will top out and correct a bit. So yeah, sentiment is a little bit too high right now, but yeah, you need to look at the big picture. Gold will probably keep on rising. So currency in circulation not rising that much, but there's still the discrepancy between stocks and gold. So this needs to converge still. And I think gold is better to invest in than stocks at this point. So we are not here yet. There's still some room to run higher. 30 to 10-year yield ratio is moving up. As this moves up, gold will also move up. Okay. And it's looking good. So the trend is rising. That's what you want to see. And this is the second derivative of that. When you actually look at this, each time when the blue line is above 0, which right now it is above 0, then the green line will also be above 0, which means gold goes up year over year. So it's looking very good. The blue line is above 0, we go higher. Debt to GDP, we know that the debt ceiling will eventually, yeah, Trump said that he wanted to abolish the debt ceiling. So as debt goes up, then gold will also move up. That is the correlation. Okay, you can see that here. Long-term debt and gold follow each other. Deficits, there are still a lot of deficits. Near-term forward spread still negative, which means rate cuts are still going to come, which means that's good for gold. So as this chart moves back in the plus, gold will move higher. Let's see where we stand right now. 30 May, and we are in the negative, minus 0.58. So this is still going to go like this, and that means gold will go to 4,000. It's really easy. Just look at the history. Rate cuts are going to come. Maybe not that much, but they will come. Stocks will be underperforming and gold will be outperforming. Okay, that's where we stand right now. Then the 2-year yields, let's see. Yeah, the trend is slowly moving lower, which means more chance of a rate cut. That's good for gold. Foreign gold deposits were flat, nothing to see here. I had hoped for more foreign gold deposits. Liquidity from the banks is dropping, and also the small banks is dropping. So more liquidity will be pumped in at a certain point. So when they start pumping it, then gold will probably also go up. Borrowing fees were unchanged. Gold futures curve, you can see we have a new data point for 2031. It's up. So it's pointing up to 4,000. So I think gold will keep on rising. Just from the futures curve, silver futures curve, and this is the latest one. Currently at 35. So yeah, it's also pointing up, which means we will probably get to $40 at some point. VIX was down, good for stocks. Yeah, I think the economy is doing pretty okay. It's not like it's crashing like in 2008. Monetary metals had a target of 3,800, so that's about 15% higher than today. So the fundamental price of gold is up. And I did a video on that before. Okay. Then we have silver import loss. We still have import losses on silver. So I'm pretty surprised that silver is doing that well. But we will see. Maybe the economy is not that bad today, but it could worsen. US dollar. Yes, the US dollar is going much lower. And as you can see here, as the US dollar craters, and it's headed this direction, that's cratering, then gold will go up. Okay, that's the gold price. It will go to 4,000. I think the DXY can still drop by 10%, which will give us 50% return in gold. So about 4,500 for next year. Yardeni is still bullish. It's going to go to 4,500 by next year. Long positioning. Yeah, longs have gone down, as I said. It's starting to move back up. So if this can move back up, then gold will go higher. What's this? This is the long positioning. It was down, but it's starting to move back up. Again, this has started to move back up. Fundamental price was green. This can go like this, and then gold will go up, right? I also added this economic policy uncertainty index to this. And you can see gold is correlated with political risk. So the more uncertainty, the higher gold will go. Let's take a look. You can see that uncertainty is still very high today, which is good for gold. Okay, let's go over some of the data as well. I want to look at deficits. Because yeah, the deficits went down due to lower imports. And you can see that here. And this is rather surprising. So this whole move down was actually not real. What should we do with this? Maybe take the average of the two, and then you could get to this point. Maybe it's still down, so deficits are still going up. And here you look at this, then yeah, we had probably 3 months of higher deficits, and then this last month lower. So you take about the average of these points, and then I think it's about here, still going this way, so not good. And also, actually, the services have done a little bit better. Yeah, so not that bad yet, and this is also improving. So yeah, this is not that bullish for gold. Okay, we want higher deficits, and apparently the US is decreasing the deficits right now. Imports and exports prices, yeah, there's still a discrepancy, higher imports than exports, so deficits are still here. Prices of commodities still rising, so there's inflation. Imports and exports, let's see, this is Q1, rising. So actually, GDP is rising. It's not like we are in a recession. This is not a recession. Still no recession. Yeah, very surprising. But this import number should come back down in Q2. But yeah, trend is up. So there's still growth in the economy. It's not as bad as people think it is. And this looks very weird as well. Yeah, I don't like these data points. They are skewed. Need to take the average, but the trend is still down. So I think the dollar will also follow this way, down. Okay. Next up, maybe the balance sheet. And I also want to look at capacity utilization and non-farm payrolls. So central bank. Central banks are well, the ECB is starting to print money. The US is still in QT mode, but that will end soon. What is the cash balance right now? Cash balance still okay, but it's dropping a bit. So at some point this will go to zero, and then they will print money. Capacity utilization was down. So less growth, less inflation. Non-farm payrolls. Yeah, it's in a downtrend, but it's not like it's crashing. Downtrend, but starting to bottom out even. Household employment level is up, the green line. So it's not looking too bad actually. Job postings indeed. Let's look. Yeah, this is looking worse. Yeah, a new low in job postings. Yeah, that's good for gold. Daily link up data. Let's see, it was 2.6 million. What is it now? 2.6. Oh, it's down. It's lower than 2.6. Probably need to take a screenshot of that. The data is looking worse for jobs. Okay, That's good for gold. Here, this is data that I still need to update, but normally the unemployment rate should go a little bit higher, maybe to 5% in the coming year. But it's not looking that bad. So this 12-month moving average data is actually dropping. So I'm surprised that the economy is doing that well. What else? True rate of unemployment is also dropping. So it's not that bad. Okay, let's look at some blog posts. US. We are going to see an update on this. This is the US international investment position. And you can see that the balance sheet is worsening. That's not good for the dollar, but is very good for gold. China keeps buying gold. As I said, the real number is 30 tons per month, somewhere here, while they report only 5 tons per month. When you look at this, at 1,200 gold, they bought this amount. And here's also about 20 tons per month at 1,300 gold. But look at this. Gold has gone up to 3,000 now, and they're still buying actually double the amount that they bought here. So it's not like they are stopping with the buying. They keep on buying more and more, and they can buy more and more. If gold is at 3,000, this should actually go down, like from 30 tons per month to 10 tons per month or 5 tons per month. But instead, they are buying 40, 50 tons per month. So this is very bullish. They can still buy, and they're buying more of it. Real estate, yeah, real estate is not a good place to be. There are more sellers than buyers. So typically, the house price index will go down when this happens. Okay. Silver miners vs gold miners. Yes, silver miners currently have a higher premium than gold miners, so they are a bit overvalued compared to gold miners. But if silver can rise a bit more than gold, then it will flatten out, right? Higher deficits. Yes, we had the big beautiful bill, which increases the deficit projections much higher. So this is the deficit projection with the new bill. Okay, that's good for gold because more deficits. Then we have mortgage rates. So as you know, the Fed is going to start QE again, but they're not going to buy mortgages. So this is bad for real estate. Bond margin requirements, yeah, that is not that important. Fundamental price of gold. So I have been looking at this fundamental price of gold. How is it calculated? I still don't know, but I think that these are some of the parameters that are being used. Okay, so let's go over all of them. The NTFS, I think the near-term forward spread is correlated with this. You can see if it's down, then it's down. It does follow a bit the fundamental price of gold. If it's green, that means that there's upside. Okay, you can see the correlation a bit. So that's the NTFS. We are still negative, which means gold will probably go up. Next one is exchange rate. This is the dollar index. The higher the dollar is, that means that we have more upside for gold. Because if gold doesn't go down with a high dollar, then eventually the dollar is going to drop and then gold will go up. So this is inversely correlated to the fundamental price of gold. Okay, so here, high dollar, high upside. Now the dollar drops down. That means that this goes up and gold goes higher. So I think exchange rate should be in the fundamental price of gold as well. Real yields is also a parameter, I think. So here we have positive real yields, and that's actually meaning that gold has upside. Negative real yields means that gold is overvalued. Currently, we are in positive real yield environment, which means there is upside in gold. Okay, it's a bit counterintuitive, but you need to look at it as saying that if gold doesn't go down with high positive real yields, that means that there is upside for gold. If we go back to a negative real yield environment, then gold will go higher. Understand? Then we have the COT long positioning. So COT long positioning is currently negative. So less long speculators. And that's actually bullish for gold, because when the longs return, then gold will go up. Okay, so that is the COT positioning. And then I've made a video about the co-basis, and that's based on the futures curve. Okay, futures curve, the higher the futures curve, the steeper, the more upside you will get for gold. Okay, so next one, Rio reset. So on 6 to 7 July, which is next month, we could have a Rio reset, and then the BRICS will do something with the financial system. I have no idea what, but that could be a catalyst for gold going higher. So let's see what happens next month. Okay. What else? Yeah, economic policy uncertainty is indeed rising. We have more economic policy uncertainty, and you have seen that there have been more deliveries at COMEX, and inventories went up. Gold price also went up during this time period. Leading index is going down. Yes, this is an important data point. Leading indicators are dropping, but we have not seen the coincident economic index drop yet. So yeah, if this goes down, typically the blue line will also start to go down. We're not seeing this yet, which is very surprising. Ray Dalio is buying gold. Okay, so he did buy some gold last quarter, opened a GLD position. That's bullish. Asia gold ETF buying. Yes, so we have Asia, which is the green chart here, and they are starting to buy more gold. So there's still a lot of room to grow when those Asians start to buy more of it. gold is flowing into the US stock market. Okay. I think this is over now. We had a correction in gold where people are starting to buy back into the US stock market. That has ended, and now we are back to 3,400 and going much higher, because I think stocks are overvalued and everyone knows that. So there's no alternative except for gold. What else? Fund managers gold take. Yeah, fund managers think that gold is actually going back to 2,500. They are crazy, okay? They all think that it's overvalued and going back to 2,500. If you look at this trend line. So everyone is still bearish and out of this market, which means gold is probably going to go up. Imports created jobs, and now they are probably going to go away. Yes, we will see. We are not there yet, but apparently loading and stocking should go down now at this point, and we will see a weak jobs market. So I think we know what gold is going to do. I'm not that bullish like last time, but yeah, in the long run, gold is probably going to go to 4,000 by the end of the year. But there are some signs that it's not that bullish anymore. Like the economy, that's actually improving. Brave Butterskelly is also back positive, so we are not seeing weakness there yet. Yeah, so what are we going to say? Seasonality is good. Still some central bank buying, but that has also gone down a bit. Yeah, and Chinese premium also down. I would say for this month, let's say it's going to be flat. Let's say it's going to be flattish around 3,500. So don't expect this to shoot up to 4,000 by next month. Okay, probably a little bit up and down around 3,500. And I'll see you in the next video.